So as we start out trading for today, this is of course the 31st of May, we're actually seeing oil prices head higher, and this is happening as we have news of the Eurozone finally taking steps to start putting ban on the use of Russian oil and many other services over a period of time. By December, they feel that they could be stopping 90% of their usage, and so that sort of reduces the Russian supply of oil onto the market. And I think that's maybe one of the reasons why this will happen. But if purely we look at the technical structure, and this is what I've been writing about, that we could go back to the top end of this range, closer to making it look like a double top up here. And the reason to expect that was the baseline ended up holding as a strong support. And so this oil and food, I've been saying, are the two places in my last video that are still holding out in terms of commodity prices. We've taken steps. Commodity prices came down because of the rising dollar. You've seen, most of the metals basically. But food and energy, which is the central part that affects people at the ground level, which is what governments would be more interested in, are still elevated. Food hasn't really fallen over a cliff, and oil is still rising. And I'm not ruling out that it can actually go all the way back up to this, 130 level is what it's showing here on the futures. Spot, I think I've seen around 135. So somewhere there around 132, 135 double top scenario is what I'm building in for. But what would make it make a double top? What would make it stop at 130 technically, looking at the structure that it should complete, is an answer I don't have. From where will you get fresh supply of oil onto the market? Because if we go onto a monthly chart, see, the first thing is there was a long-term breakout, which is one of the reasons why I've been bullish on not just oil, but the entire commodities pack for most of this time period, is this breakout. When you complete a structure like this and you do something like going negative, that's usually an extreme point, that at that level cannot come again. And so from there, we've been trying to map the 5-wave advance. And so we were in wave 5, 1, 2, 3, 4, and the 5 going on. This long upper shadow sort of gave us a clue that, okay, maybe the 5th is over, and it's possible to count 5 waves on the daily or weekly chart. But here's the funny thing, it's still not confirming on the monthly chart. Today is the last day of the month, and here at the end of May, we are still going to end up with a positive closing. So we have 1, 2, 3, 4, 5. This is the 6th month positive for oil prices. So on the monthly chart, there is no reversal. Even this long upper shadow, all it does is it gives you a resistance, which we are hoping will hold out. But what if it doesn't? And that's I think that's the oil shock, which I don't think it's easy to price in. I know a couple of people who think that the oil shock can be bigger for various reasons, not just geopolitical, but actually related to production and supply. And if you really understand that aspect, you'd probably be thinking this can even break through the 130 mark. Right now, from a technical structure, looking at this, I simply thought 5th was done here. We did fall back. And after that, all I've been looking for, because we didn't break the baseline at around $100, is a retest of the 130 mark. What I'm not able to technically anticipate is that we'll go beyond that. But like I said, there are reasons by which it's actually might be a possibility in the short term. This is one of the risks that will probably play onto the mind of markets. And it can also have a direct bearing on what we've all been hoping for, which is the US bond yields actually coming off. So if we look at the US bond chart, I put this chart out 2 days ago, and people started asking me, does this double top in the bond price really mean that you're turning bullish on the market? Because if bond yields come down, then we have a peak. Now, bond yields might actually close down for the month. So it may be completing something, but it might just be a 4th wave. That was the discussion even Dale was having with me on the, Forex Analytics channel. And if this is a 4th, do we have a 5th, one final move higher in yields pending? The very short-term structure actually gives that indication. So if I look at the daily chart, of course, we'll wait till US markets actually open. This is, of course, intraday live patterning. But what we can see here is a wedging structure, which is a triangle in short. And triangles typically see 4th waves, which is what the monthly chart I was just indicating. So if this is a 3rd and this is a 4th, then what we are looking at is one final bump up in yields. And it doesn't have to, for all you know, it can even truncate at this previous high, or it can go a little higher and then come back, or it can be a completely new trend. And why I'm saying this level, simply because it peaked there in 2018. And the question is, will we really see yields go beyond 3.2%? And if they do, then again, that would be a near-term shock, but that will have to be accompanying a new high in oil. If that's not the case, then possibly. So that's the answer, I guess, that bond yields could retest this as oil prices retest the 130 mark. Will we go beyond that or not is something we'll have to simply watch at that point of time. So as we start trade out for this morning, and I'm recording this, I've not really looked at the live market till now. The Nifty is opened lower around 115 points, and what we've seen so far, and we're going to try and figure out, is whether we've seen a counter trend bounce in an ABC kind of rise. It is inside a channel. We did get past the falling trend line from the April high. So this trend line over here is one of the cutoff points that we can actually have for this whole pattern. And so this level is at around 16,491. We need to go below that and continue to show weakness. I'll be monitoring the hourly momentum, which is the Rohit momentum indicator, if you have never seen it or used it. And this indicator might, of course, it is an hourly, so which means I have to wait till 10 o'clock, I think, for it to confirm that we have a sell crossover. And very short term, we'll be watching for that, and how far can prices really fall once we get a sell crossover, and that will sort of tell us what the market is likely to do. But so far, in terms of structure, we've been looking at it as a counter trend bounce. Now the question is, will we really resume a downward trend from here? And this would be the first level of confirmation that something like that is happening. And there will, of course, be additional confirmations and then multiple sector behavior that we'll keep watching. And key stocks, where they are in terms of levels, because each sector is actually very, very different. That's the amazing part about this sell-off. Some sectors are at the top, some are at the bottom, some are breaking a new high. And that rotation, I think, is where all the confusion then comes from. But in that situation, we have to purely look at what the index is doing as a first input to our overall expectation from the market, and do be aware that individual sectors, because of rotation, can end up doing something different at each point of time. That's something we are trying to take note of every time we take an opinion on what the market is doing.